searching for the answer to our trials. We came so far through our weakness. We found a love, even the stars between us won't marry us. One day we can be together. And this moment
That's better. Yeah, no, now I'm muted. Hey, hello. Better. Okay, back to what I was saying. Here. Rational. VIX is below triple B. That's good. Also, if you see right here, anytime you have a consolidated area in the S&P, and you notice that, right, the consolidation typically, whatever direction you break, is typically predictable by our Doomsday indicator, because what it does, it shows the bull or bear bias. We've had this for a while. This number will show up in the morning. It was 0.9, 0.8, 0.7, and as it was consolidating, we fell down to about 0.5, and I think on Friday it was like 0.54. It was barely above half. When it's above half, it's bullish. It's below half, it's bearish. So we called it Doomsday because last time we had a consolidation, you know, essentially the market consolidated and it started turning. The ratio was like 0.2, 0.3, 0.2, and then it broke to the downside. So we said, it's a Doomsday indicator. It tells you if a market's topping off and that's the end of the market, people just started selling, right? It's the bear bias. And so that's a great indicator. And so while we were consolidating and trying to sell, DD did not drop below half. It's a great way to understand this bias in the market can be set positionally. So the fact that we did break out and break to the upside is supported by actual bullish positioning, which is good. People just loading up their books for the new year. Now, I don't think it's going to be really strong bull rally, but it's certainly not looking as bearish as I thought it would be, especially on the break on Friday. And then, of course, the overnight trading, we've gone almost to an irrational state now to open up the week. So looking good. Let's see what it's saying. Oh. New resilience widget, front and center. I moved my camera so you can see it. How about that, right? This is the live resilience. This is the one that ticks, like, I believe it ticks every 2 seconds. So this is the actual resilience that I use when I trade. This is resilience that pairs up with the candles because you can't do anything different on a chart. It has to match your candle duration you select. So this resilience widget is like what everybody has been begging for, including myself, because I keep Classic app open just to watch this, and I think this should be able to be popped out. Oh, that is sexy. Guys, oh, yes. Look at that. I can put this anywhere I want now. Good morning. What's up? What's up, Hyper Alpha? You know, it'd be cool. Once we can move our widgets around, I would take this and I would pop it right here by the scanner. This is where I'd want to put it. Right? Y'all like that? Oh, sexy. So this is gonna be the resilience, the actual resilience that I use when I trade. Now resizing will be the next step. Hold on, let me chat real quick on this market chart. right, guys. Okay, let's take a look. We got Rocket Scooter front and center. We have a nice rational market. It's nice and clean. It's pretty today. Everybody tap that like button really quick. Let's go. All right. Ooh. I got a haircut on Friday. Look at that. Nice clean. Nice clean part. What's up, guys? What's up? What's up, Justice? All right. Let's take a look. Data's coming through, and we'll see what the status is in a little bit. Bull long up on SPY. Okay. Here we go. Let's take a look. Bull long up on QQQ. Everything's nice and bullish. Really nice bullish day today. UVXY. So no irrational signs to the downside. Everything's looking really clean. Bottom left. Let's look on my screen. I would say bottom left screen. Right here. NASDAQ. These are your irrational levels right here. 11,217. Okay. Okay, and that's irrational upside on QQQ. I wonder if the bot is triggering. I'm actually going to dive deep into making that bot like foolproof today.
Which is the San Francisco Fed president will be speaking at 12:30 Eastern time today. Just something.
Okay, so when you get to these irrational signals right here, no fading, no trying to fade it, no trying to short it. 39.4325. So this is a nice bull run potential today, right? I love it. Okay. Now I know this is down small on the bottom of the widgets, but ideally, you know, like we can pop the new resilience widget out, which is great, and now you get the real-time resilience, which we all loved from Classic. So one of these days, we'll be able to arrange your windows on the screen. We'll be able to put the resilience widget like wherever you want. So ideally what I want to do is I'd want to pop, or actually what I'd like to do is just grab this column and scoot it over this way, just make this a little wider. I love it. Love it, love it, love it. Okay, market's great. Okay, so let's run some scanner settings today. Nice bull long up on the S&P. Let me get my little drawing tool here. Okay. Josie, I finally fixed my computer. Hold on. We did get a rational bot play out. Great. The rational bot is working. Perfect. So it isn't getting like all 5 rational signals, but it is getting the change at market open, which is great. So we have an irrational bot now that makes it easier for you guys to see the signals. If you go to our Discord, you'll see this right here. Again, I'm going to make the bot a little better, but what it does is anytime any of the 2 major rules, DD ban and risk interval rule for VIX, those 2 both are being triggered by a bot. So now you don't have to watch. It's this one right here, like this one that I'm looking at. All 3 of these things here for the band rule and this one for the VIX rule, all of those are now satisfied by a bot. And then today I think I can get all 5 rules into the bot. So I have to write the red line algorithm, which goes into the catalyst algorithm, which goes into all the big things you need to do for automated red lines. Basically, we call it the red line algorithm. And I'm gonna actually create that today. We'll drink a few of these, do some coding, and then I'm gonna try to throw in the bot just as a stopgap to get us going. So now you guys have this thing right here. Guys talking in the background is distracting. I know. I'm on a podcast at the same time as I'm streaming. Twitter is so dumb. It doesn't let you like turn your volume down to 0. Twitter still Spaces still gives you a slight bit of volume. I'll turn it down as much as I can, but I can't like turn the volume all the way down. Okay, anyways, so here's the bot. Go on our Discord channel. It's called Rational Bot. It'll update these things and show you whenever there's a new flag. So that's great. So in a bull long up on the S&P has this particular setup. Now remember, we have a liquidity pocket here. So the minute you pass through this is random from here. So at this moment in time, it's random, right? It's balance. So the bet is if you break through out of the open with resilience greater than 0, which it is, that's a great sign. This is trade 1, and it goes to like a gap and go. And let's take a look at monthly walls, and we're going to see where that upper resistance is, if there is any. And there is none, right? So that looks pretty okay. So a small entry at the open is palatable. Now, I'm not starting my challenge today. I'm going to start my challenge this week. Sure, though. Now here, if res is less than 0, it's going to break through. It's half gap. So keep an eyeball on the resilience numbers today. Right on that liquidity pocket. Okay. So this is like, if you break through this, then the market of the day is just over. Oh yeah, but the spaces, you can't do Twitter Spaces. I know, I wish I could. Twitter Spaces doesn't let you talk while you're on your computer. You have to be on your phone to be a panelist or a speaker on Spaces. It's really stupid. So they don't have the ability to do the PC, or else I would have it all mixed together. I know, Torch. I know. So you have to have your phone. So like my phone is open, like right here, leaning on my keyboard. So I'm like touching my phone to open and close this panel, like to mute and unmute. And then like I have my stream deck over here to like change the camera angles when I'm talking on the different cameras when I get started with that. I got all these things on my desk. I wish it could all be like in one location. That DD scalp was textbook. Oh, 100%, 100%. Did you do the long off of monthly hedge pusher? Random at liquidity pocket. So my call today is that we're pretty decent here. Okay, set up A. Set up B. Would be the bet that with no catalyst, 96% of the time, bull market stays bullish. I would like nothing. Like I'm out here, right? Anything below there, I'm out. It's a great scalp day for a small scalp. I'm not no shorting, no anything. Tons of liquidity, pockets, and balance. I wouldn't do anything down here. Does that make sense? So that's how we do trade. I'm look at QQQ really quick. Let me do this like Are you guys all understanding how to construct a trade plan in the mornings? Like I'm trying to make it as easy as possible. Everybody. So since SPY is BLU, what we're going to do is we're going to go through here. Oh God, I love this too. This is a new feature. So we'll do a new feature talk today. We'll find some... Well, let's find some plays today. PayPal. Like a lot of these are these bullish setups that are around hedge pressure.
I wanna know who you really are, what you dream about at night. I wanna know who you really are, baby, come into the light. I wanna know you. I wanna know you. I know you've been feeling me, baby. Won't you give it up? And we both know that this could be something, but that ain't enough. 'Cause when the leaves start falling down,
All right.
I need to see.
Yeah, we are in the redistribution zone, so keep an eye out on this. These are the two things I'm looking for today. Market's nice and clean.
Rally up to the gap. 80-ish, 80,
DD is 0.87, which is really strong, right? So 87% of the market cap is flowing to the bull side. Uh, 87% bullish. What? It's 87%, so very bullish, right? This is genuine buying again. We could get a pretty strong rally off of this. This is really looking great. I like these. So all the signs, right? If those of you guys are first or new to Rocket Scooter, there's nothing here that's saying anything of a sell-off or anything, right? So everything is looking nice and steady and stable and bullish. Are we all on the same page here? Not trying to force your hand or entice you to trade anything, but my opinions, nice and bullish. We're even moving above the open today on SPY. That's really good. Let's look at QQQ's numbers. So I love my thesis is always really detailed, but you guys have to understand we talk about this every week, right? Hopefully it's starting to stick in. No signs of a fade today. It's a breakout from a consolidation range. That's what the Doomsday number actually shoot betting on slowing down. Okay. Lower NFP will bring down inflation naturally by lowering wages. Market stable. With the rally. New longs genuinely beginning of the year. No signs of a sell-off. Okay, let's go. Let's go. Let's go. What are you guys trading today? Everybody tell me what positions you're taking. Are y'all long? Are you short? What are you trying to do? And I also have a cold. Somewhat of a cold. A little bitty one. And let's go over the new release of Rocket Sphere. It's looking great. Remember, when we started our trading challenge, literally on YouTube, in the history of YouTube, I'm the only person ever did a trading challenge on YouTube in futures when I did it that's ever showed a historic statement to go with it, uninterrupted day after day. So when I start doing it, you'll see the history of the statement, the stats every single day, updated, updated, updated. No camera trickery, no disappear when I'm losing, no upload the video at 2 p.m. and say it was like video footage from earlier in the morning. None of that. That's guru camera trickery. None of that. Start at the same time and at the same time every day, win or lose, no camera trickery. So don't be fooled by the camera tricks of the gurus out there. Account number on the screen so you can tell it's real. You can call my broker and make trades for me with the account number. Might even make me some money if y'all want to do that. But don't do that, just joking. That's what somebody told me. They're like, you're putting your account number on the screen. You know what? I can call your broker and pretend I'm you and make trades. I'm like, okay. Some troll said that last year. It was so crazy. I was like, okay, you might actually make me some money. So, thesis today, market nice and stable, right? Nice and stable. That's the first thing we said out the door. Do you guys like how using Rocket Scooter platform, I'm able to make that determination with just a few signals? I'm not trying to fade. I know the market's strong. I even posted last night in Discord that it was strong. Similar reasons. We're on the same page. You don't like that? Travis is familiar with seeing the guru trickery out there. We see it all the time, don't we? That's what's up, Flo. I recognize his voice. Any questions about how we did the signal this morning? One of the interesting ones is when somebody says it's live trading and then the video shows up at like 1 p.m. I don't know. Does it really take that long to edit a video? I like when people like are live, they're live trading and then they have a huge loss and the next day they show up in the middle of the day somehow with a win. Oh, I won off camera. Oh, you didn't see it. Oh, too bad. Oh, too bad. Oh man, darn. BLU playbook, let's go. Okay, let's do a quickie monthly map. So what we're gonna do is we're gonna look for any bearish setups, right? So this is how this works. Let's go ahead and do SPY really quick. And what I'll do is I'll pull. Let me pull some, that's not what I want to put on there. That's my encoder. You guys remember when I was doing my trading challenge, I had some really bad moments, but they were all captured live, and I didn't like. When I got sick to my stomach, you guys got to watch me want to almost vomit on stream. I didn't disappear with emergency whatevers. Okay, let's ready. Here's what we're gonna do. Here's how you map out. Okay, let's go ahead and do ourselves a... Okay, we're gonna do a quickie monthly map on SPY, right? Okay, so the monthly map is coming out next week, guys. I'm super excited about it. Okay, so what we're gonna do is we're gonna map out 1 week at a time. So I'm gonna go to an hourly chart. This is a really cool trick that we're gonna teach you guys, but it's gonna be automated now. And so one of the things I want you to know is whenever you are consolidating right here, and by the way, if you have not tried out the Rocket Scooter platform, I urge you all to go check it out. We have a free trial for 7 days. You will not be disappointed, I promise. The indicators we have are unlike anything you've seen. They're positional risk. We find data about market makers. We do all kind of stuff that nobody has ever done before. And this information is great for all kinds of things. We designed it for people to use for risk management. I use it to find breakout plays. Our Doomsday indicator, as we said, showed that in this consolidation range, anytime you break out, one of the things to take a note of is anytime you break out of a consolidating range, when it does break out, it tends to break out towards the side of that DD number. And that DD number is a ratio. Let's talk about it really quick. It's one of the best things you'll ever use as a trader. This DD number as a trader is going to tell you, you see how right now S&P and QQQ are on the bull zone of the positional spectrum. Does everybody see that? Get a big old fat yes in chat if you see this. What bull zone means is that we are opening on the bullish side of positions. It means people are long QQQ in this particular mode without there being somebody short to them, so market makers had to short. And the market makers are the ones that bought these calls to go with their short. So it's called illiquid trading. So when there's overwhelming amount of buyers and not enough sellers to get it, dealers are taking the other side of the bill, and we're finding dealer options. What our algorithm does is find market maker options. We know what to look for, and we filter out all the rest of the options to where we just believe market makers are, get these nice clean splits on where that risk is, right? So that's the thing that Rocket Scooter, that's the code we cracked. That's what makes us special here. And so in this particular mode, what we're seeing is that the market is moving bullish while on the bull side. That's a great setup. It's a great sign. This DD number is the percent of market cap. So it's the total amount of market cap in the entire S&P that is bullish divided by the sum of the bullish plus bearish market cap. Which means what we do is we ignore anything that's balanced in the middle. If you're between the bull and bear zone, this is called balance. It's a liquidity pocket. Inside of here, it's not bullish and it's not bearish. As a matter of fact, the bulls and bears are losing if you're right here. You know, anybody that's bullish would be losing if the trading is down here. Anybody that's bearish should be losing if the trading's up here. So we eliminate what we call liquid stocks. We eliminate anything that's balanced and liquid. We look at just the things that are imbalanced. We assume that things are balanced. It's going to kind of like fluctuate and be noisy. So what the first thing DD does is eliminate the noise, right? It's the first thing engineer is going to do is eliminate anything that's noisy and get just a pure look at the weight of market cap that's bull, right? Market cap bull, market cap bear, and then it's on a seesaw, right? So which way does it rotate? Today, it's rotating bullish. 0.87 is massively bullish. Now, when we broke down and we were consolidating last week, that number, somebody called it Doomsday because, and I'll tell you exactly, and I'll go through your answer about how to map out what you're saying. So anytime you're consolidating, you can draw like, you know, what they call them, pennants, right? Where you have these, you know, it just basically lower highs, higher lows. It's a consolidating pattern. DD was like 0.8, 0.7, 0.6, still bullish, not bearish, right? And then at the end of the day, Friday, right, we squeezed until the end as people were accumulating a net long. We were 0.53, I think, on this day. It never went bearish once. So day after day after day, it was still a bull bias. And so when you break out to the upside, it's believable because it's genuinely bullish. Do y'all see how that works? So the reason they called it Doomsday, which is actually one of the members was jokingly, they said it's like a doomsday clock. This actually came from this particular week, and I remember exactly when this happened. And it all blew our minds because this was a brand new indicator that was invented live on the stream. We knew that we were using it to make those bands pivotable, right? The bands that we give you guys every day. But in this particular mode, this is when Elon announced some layoffs. So that's not that one. I think it was either here or here. One of these 2 days. It was like consolidating. And what happened was it was just sort of wedging. Or actually I think it was this one, and it was a positive bias, like positive. In the last couple of days it went negative, and then it broke to the downside. So the positional risk was a leading indicator to indicate which direction a consolidation mode would break down. So while it was trying to trade a little bit higher, that DD number was less than half, which means there's actually a bear bias to the market. So why did it go up? Well, clearly a short squeeze in the middle of a bear bias. So people were getting squeezed out of their shorts before it dropped. So somebody goes, oh my God, it's like a doomsday indicator. It's telling you when the market is kind of topping out, ready to fall. And it's really just the weight of positional risk. There's no finding it's the magic. Like the fact that we are able to find that is something that is nobody can do, but it is impossible to be incorrect on what's going on in the market because it is the sum of everybody's positioning. There's no way it's wrong. Now, predicting direction is different. You can't say that it will predict the direction, but the market has broken out to the direction of the stock bias in the S&P. And so, as you see, we never lost 0.5 on Doomsday, as far as I remember. Maybe, I can't remember. I remember if it was anything on Friday, I can't remember if it went bearish, but it was bullish. And when you break out of that range and DD is greater than half, it is definitely a true bull rally of accumulation. It's not a short squeeze today, it's people going long. Does that make sense? So the idea is that, well, Travis, any indicator you come up with is going to be Doomsday for my trading account. Ayo. Ooh, he's so clever. He's so clever sometimes. Just kidding. Love you, Travis. So you guys understand that? This is genuine. This is very strong and bullish on the breakout supporting that. So great setup. So let's go back to here, right? And let's talk about what was being asked earlier. Oops, wrong one. That's not what I wanted to pull up. Not you. Was it you? Yeah, you. Okay. So let's go ahead and show you guys how monthly maps work. And monthly maps are really good at showing you the direction of risk shifting, right? So let's do SPY. We can map out every Friday for the next couple of weeks and see what SPY looks like. So what I do is I go to single date, type in a single date and hit refresh. And all I'm going to do is look for where that risk is split up on the bull side and bear side. It's a super cool trick, but imagine this, right? There's going to be a one button click that'll do all this for you. Next week. So our guys are building that right now as we speak. Once I got all the new stuff put out today, that is the very next thing we're making. We zoom in and we'll pick Friday, which is the 13th. 380. Oh wait, let's do SPY. It'd be better if I just put it on SPY. So what I'm gonna do is I'm gonna go here and I'm gonna draw. Let me put on my glasses here. Ooh, hello, sexy boy. 380. It's a little trickier here. I'm just going to draw a box that shows where that bull setup is, and I'm going to make this a darker gray because I like the darker gray ones. And 360 is where the market is got some bear bias down here, so I'm going to put this way down here. So in a monthly map, let's find out, do we have any resistances? That was the question that was being asked today. So the monthly map will cue you in on that. So this, and I like to just do Fridays because that's when the stocks are expiring, even though SPY has its actionable trading right on its own, and also it expires every single day of the week for the first 2 weeks now. So we'll have monthly expiring options, weekly expiring options, and Monday, Tuesday, Wednesday, Thursday weeklies now on SPY for 2 weeks. And the CBOE released new options schedule a couple months back, which is great. But still, you know, we want to match the Fridays first just to get a general look, and then we'll zoom into this week. So the risk on the 20th. Hey, sorry about that. What's up? We had a new release in Rocket Scooter, so no trades today, but I hypothetically in my head was screaming I would be bullish if I was doing anything. So I'm actually starting my live trading challenge in a couple days. So I'll be streaming all my trades live on YouTube as well. But long and strong, the market's got no signs of any downside. The first thing we set out the door was things were strong. Things are long. Our positional bias indicator, 87% of market caps flown bullish. I mean, you can't argue with that. Friday was an accumulation wave. Everybody's going long all the things. All the stocks are looking great today. I mean, Scanner was popping up some pretty decent plays this morning. Just everything's looking strong. Tech looking good. Banking's looking good. You know, I think that for the next couple days, there's just going to be, you know, the total amount of Wall Street that wants to load up stuff on their books will, you know, they'll clearly show when they're done doing that. I would do anything other than try to fade this. There's two ways to trade this, I think. You know, taking directional longs to get on that side of the trade, or people that are on the sell side of credit spreads, right? Selling puts and other types of, you know, market won't go down trades, as opposed to I'm going to be bullish trades. You know, we teach different styles of trading. So, you know, when you break this strong to the upside, a lot of traders that I know that do options trading would sell options to the downside, you know, betting that we don't just turn around and crash for no reason. So, you know, the types of hypothetical plays I would have played today if I wasn't. Yeah, and I'm juggling between the stream and the space here. Would be like, you know, like supporting 39.43, that number I talked about today. That's a strong long signal. Market's kind of a rational upside. Looks good. Or selling puts, you know, below like the 38.80 level and things like that as part of a credit spread. So, or selling a credit spread. So, market's stable, good. I mean, like I said, it's probably gonna be hard to pick a loser today if you're on the upside trades. Everything's strong. VIX is in decay. No signs of anything turn around. So, it just depends on, you know, how you like to bet. But yep. Oh, by the way, hedge pressure on S&P, if you guys want to know where that strong hedging, 387. I mean, we're way above that, so it's really strong on the bull hedging as well. So. I made a post with like I drew the trade plan. So like in the mornings, what I do is I'll post on my Twitter feed the actual trade plan like before the move, and I mapped out this move. We call this trade setup A. It's the one I would have taken had I actually been starting my challenge. I'm waiting to start my challenge to show off the trade. So go check it out if you guys want to see it. I was up so late fixing my computer. I plan on getting everything set up for today, but just to remind you guys.
No, not really. Today I did not trade.
Trade setup A, resilience greater than 0. Trade setup B bounces off of there. So I mean, you had res dipped slightly below 0 for a little bit. Let me see if it actually, yeah. So the tick by tick resilience, I love this. Love this. Okay. Back to monthly maps, sorry, because he pulls me to chit chat, so sometimes I have to answer that. Okay. So monthly maps, right? Let's continue to go and show you guys how to do this trick. And this is gonna be something that's a one-click button, automated when we get it done. Ooh. Okay. Back to the 20th. What you do is you take every single Friday and you run single date and you map it out just like it shows. It'll show you how that risk is distributed. Ignore all the other lines on the charts. This is actually on I should probably be doing this on a blank chart, but okay. Ignore all the other lines. This is a study thing that we're doing for another indicator. The 20th will be here. So what I'm doing is all I care about is the split between the bear and bull side. So I'm going to do 365 and just draw like a box. Don't worry about the height of the box. It's kind of arbitrary. 355. So we're going to map out like how... Actually, you know what? 380, 360. I'm actually going to do this on a blank chart so I can publish this. Make it look prettier. So just repeating, you're going to do every Friday... 380, 360. So I'm going to kind of do this. Dude, that Doomsday indicator is so great. That positional bias is phenomenal. I love that tool. So one of the tricks of it is that you just always keep that in your back pocket, so that when the market does break out like this, you believe the breakout. And the Wall Street told you the breakout all last week, didn't it? So I don't wake up today and say, okay, thank God there's the high to short from. Like if I was trying to short from Friday and we had a breakout like this, I would literally get out of the way. This is a full bull move, bull rally. It's believable, right? That Doomsday indicator is believable positioning. It's not a short squeeze. It's not based on technical analysis. It's not based on momentum or any of that junk, right? Pictures on your chart. It's literally based on the positions of people in the market while they're liquid. The real bulls versus the real bears. You cannot argue with seeing real bulls beating real bears. That's very strong, 0.87. And so as a risk management tool, it tells me, okay, if I was actually trying to short this and you're sitting there with what we call hopium, right? You're hoping the market turns around and goes your way. 378 to 340. You're going to have a very hard time getting that hope that you want. Wall Street is definitely against you today. Every morning that number changes though, but we never got it really bearish, right? I have to go back and check the other streams because they'll let me mislead you. I think it was bullish all through the week. If it went bearish, it went bearish for one day, but I don't think that it did. Of course, a lot has happened over the weekend. Cleaned up a few empty whiskey bottles this morning, so, you know, my memory's a little fuzzy. I like to drink whiskey when I code. 378. Okay, so now keep mapping out for 3 weeks. Okay. So what you see on the monthly map here is that there is really nothing but bull support going for the next couple of weeks. All right. It's all bullish there. It's all bearish there. So in the monthly map, what it's telling you is that when two things take place, and these are two things to take away, and this is the greatest tool that a swing trader or an investor will ever want to have when it comes down to mapping out where the positional risk is. So I'm using the classic app to manually draw it on Thinkorswim. In about a week, you're gonna have one single button on a Rocket Scooter platform to be able to click it. You'll be able to go right here, you'll click monthly map. It'll switch this mode to probably an hourly chart for you, and it will draw the same thing mapped out that I'm kind of manually drawing here. So we've been making the monthly map for about a month now, and I'm so excited to have this because this is one of the strongest tools that we have. So you can clearly see that for the next 3 weeks, the market is positioned bullish. That's that strong 0.87 DD number, right? 0.87 DD. The market cap is all tilted bullish. 87% of the market cap is flowing to the bull side. Well, here's your evidence of that. Look at these Friday options. This is all bullish. Dark gray is the bull call options, right? Bullish, bullish. Look at all this bull. 3 weeks from now, it's all bull support. You just completed 26% return on SPY, 1 to 10, 391 call, which you have more than one like I can give you. Charles. Okay, so does everybody see this? Bull zone, bull zone, bull zone. That explains that 87%, doesn't it? Look how strong and bull we are for the whole way up. So let me tell you how to read this, right? And this map will change every day. So bull zone means that even if it dips to here, it's still bullish support. So when people are willing to buy lower, further, two things. When people are willing to buy lower, that's more bullish. Like if I'm a bull at 380, but I'm not a bull at 377, but the next week I am, because you're in the bull territory, then it means over the next 2 weeks, people are becoming less scared of being bull. If you're willing to buy lower, it's more bullish. So you're going to jot down some rules. From here to here, it's more bullish than it is the week before. So the bull signal gets even stronger next week. If people are willing to short higher, it's more bearish. If it has to go lower for people to be bearish, it's even less bearish. You have two different signs of the market. Don't think of bearish as up and bullish, or bearish is down and bullish is up. Think of them as separate entities. Think of bullish as people wanting to be long and bearish as people wanting to be short. So people are more bullish, and at the same time, they're also less bearish. So bears are exiting their positions and bulls are entering in lower. You see that? So takeaway number one is the signal of how it's moving. And then of course, after here, you can see that, you know, volatility is going up. We'll talk about that in a second. Signal number two is this distance, okay? I'm going to put a V here, or distance, between the two sides. Okay. We're going to call this V1 and V2 and V3. This is actually the implied move, or the actual expected move. This particular distance between the bull and bear zone magically will be your expected move on anything. If you do this for Apple, for instance, pretend that this was Apple stock and you're going into Apple earnings report. This distance is the expected move based on just volatility. This is better than other expected move indicators because this is purely based on illiquid positions, which is what causes volatility to begin with when markets are not liquid. Liquid, or volatility, is the inverse of liquidity, if you want to learn from a mathematician's point of view. So we're looking at where bulls are with no bears. This is illiquid up in here. It's illiquid down in here. So the distance between the bulls and bears being wider, it's less liquid. So when we do liquidity analysis from here to here, it becomes more liquid, because the expected range is less volatile. So the market's not only more bullish and less bearish, but over the course of the next 2 weeks, it's gonna be more liquid, which means a tighter trade with less drawdown to the downside if the bullish continues to go. So an example is in a bull move that dips and dips and dips, a more liquid or less volatile, because inverse, so more liquid equals less volatile. That's what this relationship means. Do we all understand so far? Get a little yes in chat if you guys understand this. And by the way, like the stream, we're dropping some free knowledge bombs for you guys. So now we're mapping out the SPY based on pure positional risk, right? So the difference between a less volatile bull move is that you have like less drawdown. It's gonna be cleaner. Hold on 1 second. All right, give me 1 second, guys. I'm gonna go check something from my neighbor. Hold on. Sorry, my neighbor was asking if my garage is open. Okay, everybody here, check, check. Do you understand what I say when I'm talking about monthly maps and what we're doing? So this is how you, and again, when we do the monthly map indicator, it'll tell you all this on the screen. So more liquid is less volatile, right? Oops, let me actually screenshot that. It works for anything. You can do this for any stock, any index, anything. That's the beautiful part. You can plan your swing trades around this. So let's see, like V1. So more liquid. So you have a combination of more liquid and stronger bull signal. It's going to become even stronger next week. Now, again, every day you remap this to make sure sentiment doesn't change. But as of right now, next week is going to be less volatile with VIX to decay even further and stronger bull signal. So the takeaway is the monthly map will give you an indicator. Right, so volatility is the inverse of liquidity. That's the best way to see the relationship, right? So the signal right here is going to be two things, right? So however you're trading, especially swing trading. Yo, John, dude, what's up, bro? It's been forever. How you been? Okay, look. So not only is the signal map says the results map. 1, the strongest bull week. Okay, we'll do another thing. Right, it's going to basically give you like a printout of what's going on over the week. So we'll do week 1. Actually, like week. So week 1, 2, 3. So let's go ahead and on these. So the map is telling me that bullish week 1, bullish week 2, bullish week 3. So 3 weeks of bullish, 3 weeks bull bias, right? 3 weeks bull bias. The strongest bull week is next week, which I'll tell you why in a second. Number 2 is week 2 is the strongest bull week. When people are the most bullish, they're willing to be bullish at a lower position. So week 2 is the strongest bull week. Number 3, week 2 is the least volatile week. So this isn't even going to tell me the VIX is going to decay further. Those of you that are trying to short the VIX or buy VIX calls against your VIX short, week 2 is less volatile than week 1. Least volatile of the 3 weeks. So there's a massive increase in volatility between here and here. I can bet that we might have an FOMC meeting in there. So what's going on between 2 and 3? Well, let's go to the news and see if we can't find anything, right? What's going on the calendar next week? Let's go to the next. Actually, let's go to the actual week that we're talking about. What's going on the week of the 24th? Because that's what we are. Hold on. Oops, let's go the week before. Hold on. 1, 2, 3 weeks out. Let's pick the calendar, and we are actually the 9th. Okay, so let's go ahead and just plot like all of this. Okay. Let's go down to and just look on the calendar and just say, okay, what's going on between the 12th and the 13th and the 20th, right? Probably a very light week on the news, right? Nothing. PPI. Wednesday, besides PPI, see nothing, right? Nothing really big that week. That's why volatility is shrinking. It's neat that this is telling you that's a light news week. It's pretty cool. Easy to see that. Okay. Going into the next week, though, let's see what's going on Tuesday, Monday. I bet you we got a lot of good stuff coming out this week. GDP. Oh, there you go. That's the big thing, right? So GDP coming out on the 26th week. So the market's telling you what they believe the most important news events are. Something going on between week 2 and 3 is going to be huge. People are disagreeing greatly. Now, GDP is going to be the production against the layoffs. So people, do we lay off efficient workers or inefficient workers? I believe inefficient workers. I don't think we've laid off anybody that was doing much. But there you go, right? So there's a little bit of volatility going there. When's the next FOMC meeting, by the way? Am I missing what day that is? Yeah, decision day. I'll have to look. We also have a holiday, I think. What's going on here? Thursday, Friday. Is it February? Okay. So this is likely, and again, this is going to infer something. Number 4, we have to infer something really big, right? Week 3, big volatility, and you have to ask yourself why, right? Big volatility. And you usually have to say why, and you go look at the news, right? And the news is showing us the GDP numbers are coming out. It's gonna be huge. GDP is gonna be a very strong indication of all the Fed's balancing act this year of inducing layoffs, raising rates, wages coming down, inflation balance. Are we actually gonna grow from that? That is gonna be the big catalyst. GDP, we just boiled it down. So now you guys are 3 weeks ahead of the news. They're gonna be talking about what's going on here. Well, why would volatility increase somewhere inside of here? So monthly maps tell you so much about the market. They even told me the most important news thing coming out that week. Do we all understand how powerful this is? This told me I need to go look at why. We got to go look it up. So that's the whole point. And this is really cool to understand that I can not only find what I think the market's behavior is going to be, or sentiment's going to be, but the behavior and when that behavior changes. So we got 2 weeks of probably a nice strong bull rally that might have some dips that I'd be willing to gobble up some longs on. So week 2 is the least volatile. Week 3 is big volatile. And you say, why? Just go look it up. What's going on that week? And that's exactly what monthly map is going to do. It's going to give you like a little output that can explain how now we're going to, how do we make our trades? Not only is there like a little bit of a text output, but how are we going to make some trades around this, right? It's now this is the better part. So remember, going into that 3rd week is going to be 23rd to 27th. Again, unless I missed something. Manufacturing PMI, like a maybe. But to be honest, right here, that's it. Okay? Do y'all get it? Thank you, John. It's really, really sweet, bro. Wall Street is telling you what they care about. It doesn't matter what you think or what the news thinks after the fact. Do you see that Wall Street is telling you what they care about? That's the only thing I could find between here and here that's scripted, that is such a big deal that the volatility just rapidly increases, right? Do y'all understand? Do y'all see that? So it's kind of like when people right now are talking about inflation and FOMC, that's Wall Street is considering none of that right now, because until the following week when that meeting comes out. So let's go ahead and map that out and see. Now, I don't like to map too far past a monthly barrier, because a lot of times it's going to be hard to see that far out. But you can see that even week 4 is also volatile. 377. Oh, geez Louise. 377.5 for week 4. And what do we have? 335. It gets even more volatile. And there you go. So what monthly map has done is told me exactly what's going on this month. Okay, class, quiz. Everybody here, there's like 100 people watching today. What you've learned in this session, this is a new indicator Rocket Scooter will be producing in about 1 week. Oops. You tell me what you see between week 3 and week 4 now. I want to see if y'all learned something. Wait, how did I just squished this zone down. So now you tell me what's going on week 4, right? Tell me what's going on in week 4. Just describe it to me in plain English. Somebody describe week 4. Is it more or less bullish? Between week 3 and week 4, it's, let's start over. Let's do more or less. Let's not think of bullish or bearish. It's certainly bullish, but compare it to the week prior. Let's take it one leg at a time. I know let's one leg at a time. So it's not more bullish than it was the week before. So people are week 4, it's not more bullish, it's the same. Week 4 is same as week 3. It's bullish, but same, it's not more bullish, right? It's not less bullish, not more bullish, it's same bullish as 3, right? Week 4, are people more or less bearish? I wouldn't say, so if it's the same, I just drew that off. It's the same level, I believe. So don't look at the line being curved. That's just Matt's lazy drawings. So week 4 is same bullish, but let's talk about the bear side. What do you notice about the bear side? More bearish, right? Same bullish, but more bearish, right? People are more bearish. The market's not more bearish. The bears are stronger. The bulls are the same. So let's say, like, let's go ahead and, like, let's label it differently. Don't think the market's more bearish. We haven't even talked about the market yet. We're talking about people's sentiment. Week 4, bulls are the same. Bulls are steady. Bulls are the same. Bears are more bearish. That's a proper way to say this, actually. I'm actually going to change the language to be more. Bears are more bearish. The market, relative to this, is a bullish market. You're looking at the price. So the bears are more bearish because they're going to short. I'm sorry. Less bearish. Less bearish. I'm even confusing myself. So the bears have to short even lower to become bearish. So they're not confident being bearish unless it goes even lower, so they're less bearish. So if you're willing to buy lower, you're more bullish. If you have to go lower to be confident and short, you're less bearish. So more bearish should be up here. So bulls are the same, people are even less bearish. So tell me about the volatility. V4. Less liquid, you nailed it. More volatile. Why? Even bigger volatility. And then anytime you have big volatility, you go, why? Go to the news. We know exactly what's going on. Hedge pressure. Yeah, John, I gotta get with me after this. I'll do a Zoom call. Join up, I'll show you. You have to see the whole platform you made. I gotta fill you in, dude. I gotta chat with you. It's been forever, my friend. FOMC, and you guys nailed it, right? So what I've done right now is I've boiled down the next month to 2 things that matter. That's it. This is literally, besides earnings, this is all that matters, right? I believe, for the greater fundamentals. So you can see that first and foremost, you can get a fundamental printout of people's positional bias, right? This is the whole idea of monthly map. Number 2 is let's make some trade plans around this. Let's understand what's going on. So right now, Rocket Scooter can produce a report like this, and eventually we can parse the news data to try to give you the answer. Don't wait for CNBC to tell you why markets are moving. You can tell yourself between week 2 and week 3, markets are going to be very volatile because of that GDP report coming out. And then between week 3 and 4, additionally for FOMC, these are big things. So now try to forecast what each one of those are going to do and be a real trader. Why am I going to bet on the market? Well, I need to bet on what I think is going to happen with GDP and FOMC. So FOMC, there's the thesis. They're going to raise rates less aggressively. 50 bips or 25 bips, right? As unemployment numbers are going up and jolts are coming down and non-farms are coming down, the FOMC is very, very unlikely to raise their rates faster than 50 bips, probably even raise the rates 25 or less, because they don't want to continue to stimulate people getting laid off further by Wall Street's understanding that higher rates is let's sell the stocks. They don't want to crash the market. So I'm going to bet that the FOMC is going to come in a little milder and less hawkish going forward. Now, GDP, that's the big question, right? How much production are we getting once we lay off 5 or 10% of our workforce? That's the natural productivity growth of the economy. So that's a big deal. That's your baseline economic strength, right? And that's what people are really going to be staring at, because that's going to answer the margin problems, or the margin question of earnings, which is the real bet besides FOMC, is how efficient are companies going to perform in light of layoffs and high costs of wages back last year and high costs of materials and shortages and transportation issues are starting to recover from that. How much are we doing with our labor by producing stuff, and how well are we selling it for profit? That's the only two fundamental things that matter besides the FOMC, which is not necessarily fundamental, but that's a forced hand behavior, right? So